Now, the next section which we are going to discuss is section number 18. Before we go ahead and start the section, I would like to go ahead and tell you what are we done till now. We started input tax credit chapter. Input tax credit chapter, I started section number 16 and I taught you section number 17. Section number 16, one I told you registered person is eligible. Section number 16, 2 TR condition. Section number 16, 3, if you take depreciation, don't take ITC. If you take ITC, don't take depreciation. Done, sir. Point is clear. Section number 16, 4 told maximum time limit to go ahead and take the credit is, sir, 20th of October, which is our actual date of annual return, whichever is earlier. Yes, sir. Point is clear. Then section number 17, section number 17, one goes ahead and says if you are using something for business purpose and non-business purpose, you will get the credit with respect to business purpose. Sir, if you are using something for taxable supply and exempt supply, you will get the credit with respect to taxable supply. Section number 17.3. Section number 17.3 goes ahead and gives the definition of exempt supply for the purpose of apportionment. Section number 17.4, banking company related, take 50%, forget 50%. 5 went ahead and told about block credit. Section number 17.6. Section number 17.6 went ahead and told government will go ahead and tell the method of apportionment, and government has told rule number 42 and 43. Yes, sir. Are we all clear till here? Yes, sir. We are all clear. We will go ahead and now learn section number 18, which goes ahead and talks what are the special circumstances when you will get the credit. Section number 18, credit in special circumstances. Section number 18 has 18.1, 18.2, 18.3, 18.4 and section number 18.6. 18.5 is total bakwas. Section number 18.1 goes ahead and says, sir, supposingly a person has taken new registration. For an example, I went ahead and became liable. Everyone over here, I went ahead and became liable. I have to go ahead and apply within 30 days. I went ahead and applied for registration. Here registration certificate was granted. This registration certificate will be valid from here. And hence, I have to go ahead and pay the GST to the government from here only. Yes, sir, all the GST has to be paid. So, sir, my question which was asked was, what about, sir, one day before whatever stock was lying with me? So, government went ahead and told, Ramesh, because you became liable over here, registration certificate made valid from here. One day before, whatever input was there in your stock, input was there in your semi-finished goods, only input and input which was there in your finished goods, you will be able to take the input tax credit. You will be able to take the input tax credit. Take out the invoices. You would not have taken the credit earlier because you were not a registered person. Now you are taking new registration. You can go ahead and take the credit. I will tell you once again. Listen to me very carefully. I was an unregistered person. Now, one day I became liable. If you become liable, you should go ahead and apply within 30 days. Once you apply and registration certificate is granted, registration certificate will be valid from here. Once registration certificate is valid from here, means from here you have to start charging GST anyways. You have to pay GST. So one day before, whatever input is there in your stock, input is there in your semi-finished goods, input is there in your finished goods, you can take the input tax credit. Done, sir. That is what is being told. New person, first time registration, unregistered person to registered person has become applied within 30 days. Then person shall be entitled to take input tax credit of input held in stock, input contained in semi-finished goods, input contained in finished goods, held on the day immediately preceding the date from which he becomes liable. So, if I have applied within 30 days, registration certificate will be valid from here. Sir, one day before you become liable, whatever is your stock, of that you can take the credit. Done, sir. Point is clear. Sir, voluntary registration, Bakra Baba, voluntary registration. You are going ahead and telling, sir, I am an unregistered person. One day you woke up from your dream, you went ahead and applied for registration, and here registration certificate was granted. Registration certificate is valid from the date of grant, and hence you will start charging GST from here. So, one day before the grant, whatever input was there in your stock, input is there in your semi-finished goods, input which is there in your finished goods, whatever is the ITC, you can go ahead and take the credit, because now on you are going to charge GST. So one day before, whatever inputs are there in your stock, semi-finished goods and finished goods, you can go ahead and take the credit. Sir, from the date of grant, one day before, whatever inputs are there. So it is told over here, person shall be entitled of input held in stock, semi-finished goods, finished goods, held on the day immediately preceding the date of grant of registration. Next, if you are already a registered person, for an example, you were a compo, yes sir, and then now I become a normal person, sir, I will starting charging GST from here. So, sir, one day before, whatever input is there in your stock, input is there in your semi-finished goods, input which is there in your finished goods, plus capital goods also, you can go ahead and take the credit. Listen always, here you can take the full ITC. Capital goods related, always remember one thing. They are going ahead and telling Ramesh, you have what when did you buy the capital goods? I told 1st January I went ahead and bought the capital goods. Sir, till 30th June you were a composition person. It means 6 months you have gone ahead and used it as a composition person. So sir, how much is the GST you had paid? I told I had paid 60,000 rupees GST. They are telling 5% per quarter you have to remove it, and then remaining ITC you can go ahead and take it. So sir, if I go ahead and remove 10%, I can not take the full credit. Reduced amount of credit I will be eligible to take. Are we clear, everyone? Yes, sir. Composition dealer now became regular taxpayer, date from which he becomes liable to pay tax under section number 9. So from here, you are a normal person. You will start paying GST normally. Then one day before, whatever input is there in your stock, semi-finished goods, finished goods, you can take the credit. Plus, capital goods ka ITC also available. But as per rule number 40 goes ahead and tells you can take the credit. See over here, capital goods का credit input tax minus 5% per quarter or part thereof from the date of invoice. Yes, sir. Point is clear. Can I go ahead? Yes, sir. We are all clear. Capital goods, whatever GST was paid, 5% per quarter or part thereof, you remove it. Remaining amount ka you can take the credit. Input in stock, semi-finished good, finished goods, whatever the GST is paid, you can take the ITC. Yes, sir. Point is clear. Let's go ahead. The next one over here now. Exempt supply of a registered person. So you were already a registered person, but you were a registered person supplying taxable supplies also, and you go ahead and supply exempt supplies also. Listen to me very carefully, Kaushik, that will come. Hold it. Everyone over here now. You were going ahead and supplying exempt supplies. These supplies now became you were already a registered person. Your supplies became taxable supply. From here, you will start charging GST on your supplies one day prior. Input which is there in your stock, input which is there in your semi-finished goods, and input which is there in your finished goods. You can go ahead and take the ITC. Remember always, capital goods ka credit also you can go ahead and take, but that will be reduced. How much ever the credit was there, 5% per quarter or part thereof, you have to remove it, and remaining credit you can go ahead and take ITC which is reduced by 5% per quarter or part. See over here, everyone. Sir, date from which he becomes liable when supplies become taxable. Capital goods which are used for exempt supply, ITC available, but that is again 5% reduced. Remember, note, new registration credit available only if applied within 30 days of becoming liable. If you don't go ahead and file your ITC 01 to claim your credit within 30 days, remember always, if you don't take registration within 30 days, when you go online, no, to claim your credit, you have to file ITC 01 if you want to claim all this credit. You know, all this credit when you have to claim, you have to go online and file ITC 01. If you don't take registration within 30 days, portal will not allow you to file ITC 01 only. They will tell you did not take registration within 30 days, get lost, you will not be able to claim credit on your input in stock, semi-finished goods and finished goods and finished goods. Yes, sir. Next. Sir, rule number 40 goes ahead and says, manner of claiming credit with respect to special circumstances. ITC on capital goods, I've already told you, whatever was the ITC taken, 5% per quarter or part thereof, you have to remove it. Okay, sir. Registered person has to go online and file within 30 days from the date of becoming eligible. He has to file a declaration in ITC 01 to the effect that he is eligible. Whatever credit you are eligible, that amount you have to mention in your ITC 01 and you can take the credit. Then declaration should specify details of input held in stock, semi-finished goods and finished goods on the day immediately preceding. I've already told you, you have to always see one day prior. Yes. Plus, it should be certified by practicing chartered accountant or cost accountant if the amount of claim is greater than 2 lakh. ITC claim under section number 18(1)(c) and D will be verified with the details which are furnished by GST in GSTR 1 and GSTR 4 by the supplier. Your claim will be verified. Okay, sir. Point is clear. Listen to me very carefully. Section number 18, I went ahead and told you section number 18(1). Section number 18(1) went ahead and told if you are taking a new registration, you became liable in case of new registration. Sorry, in case of new registration, section number 18(1) is there. If you become liable over here and you go ahead and apply within 30 days and here registration certificate is granted, it shall be valid from here, and hence 1 day prior whatever input is there in your stock, you input is there in your semi-finished goods and finished goods, you can take the credit. Sir, section number 18(2) went ahead and told voluntary registration. In case of voluntary registration, the day you are granted the registration certificate, that day it is valid. So sir, 1 day prior whatever input is there, you can take the credit. Third one is composition person became normal person. Composition person now became normal person. From here he will start charging GST. So 1 day prior whatever input is there in his stock and capital goods, also he can go ahead and take the credit. Input in stock, semi finished goods, finished goods and capital goods ka credit also he can go ahead and take. Fourth one, sir, you were already a registered person. You were already a registered person supplying exempt supplies. Now your exempt supplies became taxable supplies. 1 day prior, whatever input is there in your stock, semi-finished goods, finished goods, and capital goods, reduced amount of credit you can go ahead and take. That is told by section number 18(1). Now listen to me very carefully. Whenever you are taking this input, capital goods, input, capital goods, input, and input ka credit, always remember only those inputs and capital goods ka you can go ahead and take the credit for which invoices are up to 1 year old. Invoices older than 1 year, you can't take the credit. Only in special circumstance, section number 18(2) is applicable. Section number 18(2) goes ahead and says, in these four circumstances, when you are taking the credit, no ITC of goods, services or both for invoices older than 1 year. Means when you are going ahead and taking the credit, you take off only those invoices which are up to 1 year old. Invoices older than 1 year, no credit. Done, sir. Point is clear. Section number 18(3) goes ahead and says, sir, in case of change in constitution of a registered person, ITC can be transferred. Sir, what do you mean by this? This is supposingly a transferor and supposingly this is a transferee. Sir, transferor went ahead and transferred his business to the transferee. Always remember one thing. Transferor is a registered person. He already has e-credit ledger में supposingly 1 lakh rupees. Transferee who is there, he has to take registration under section number 22(3). Sir, you have already learned it. So whenever you are going ahead and transferring your business as going concern, it is exempted from GST. This also you know. So supposingly there is a transferor and he is a registered person, he would have taken the credit. Yes, sir. Now he has transferred his business as going concern. When you transfer your business as going concern, that is exempted from GST. Why exempted? Because this person has to go ahead and take registration under section number 22(3), collect GST on the supplies and give it to the government. Now he is going ahead and telling, sir, what about the credit which is lying in the e-credit ledger of the transferor? Government is telling, Ramesh, whenever you transfer your business, transfer the credit also. Go online, file ITC 02. It will go to the front party. He will go ahead and accept it and the credit will be transferred to his e-credit ledger because he is now a registered person. Everyone over here. Sale, merger, demerger, amalgamation, transfer of business including death. Registered person allowed to transfer ITC which remains unutilized. How will he go ahead and transfer? File ITC 02. Buyer will accept and ITC will get transferred. You have to file ITC 02. Buyer will go ahead and accept and the credit will get transferred. Done, sir. Point is clear. Next. Sir, what about in case of demerger? For an example, there was a big company which was there. Big company had e-credit ledger में 1 lakh rupees. Now they have gone ahead and demerged one small unit. Sir, here 800 crore ka assets remained. Here 200 crore ka assets transferred. Now my question to you guys is, how much e-credit ledger से ITC with 02 में you will go ahead and transfer to the demerged unit? So this is the transferor. He has gone ahead and made a small business transfer, he demerged. Now whenever you demerge one unit, how much credit will you transfer? They went ahead and told in the ratio of the asset. How much ratio of asset? 8:2. So sir, how much credit will you transfer? You will go ahead and transfer the credit in the ratio of your asset. 80,000 ka credit you will go ahead and transfer. In case of demerger, ITC apportionment in the ratio of the asset of the new unit. Sir, ITC 02, is there any time limit? No time limit, but chartered accountant or cost accountant certificate is mandatory irrespective of the amount. Next, rule number 41A is applicable for what? Sir, supposingly in the state of Delhi, I have one business over here and one more unit over here. This is under one registration, principal place of business. What I have gone ahead and done, this place I have gone ahead and shown as my additional place of business. But later I went ahead and thought, let me go ahead and take separate registration. I went ahead and took separate registration for this. Now, when you take separate registration, both of them become distinct person. Sir, what about the ITC which was there here? Should I not transfer some amount of ITC over here? Yes, they went ahead and told you have to go ahead and transfer some amount of ITC. How much ITC you are going to transfer? That on the basis of the ratio of the asset you go ahead and transfer. But sir, you have to file ITC 02A when you are transferring to your distinct person. That is what is being told. ITC transfer to your distinct person in the ratio of the asset. Separate registration when you take in the same state. Separate registration when you take in the same state. You can transfer the credit. Just go online and file ITC 02A within 30 days. Next, sir, listen to me very carefully. Everyone over here now. I went ahead. I was a composition dealer. When I was a composition dealer and I became a normal person, one day before, whatever input was there in my stock, input which was there in my semi-finished goods, input which was there in my finished goods and capital goods ka, all ka ITC I was given. Now you think reverse. Normal person became composition, then all the ITC you have to go ahead and reverse. Simple. Sir, when you became composition person to normal person, you were given the ITC. What about when you became normal person to composition person, you switched to composition, then you have to go ahead and reverse the ITC. Sir, I was a registered person going ahead and supplying exempt supply. Now my exempt supplies became taxable supplies. Sir, input in stock, input in semi-finished goods, input in finished goods and capital goods, you can go ahead and take the ITC. When exempt supplies became taxable supply. My question is, what if taxable supplies now became exempt supply? Sir, ITC to be reversed. That's all they are going ahead and telling. Sir, you were a normal person. Now you became composition. Sir, or you were supplying taxable supplies. Your taxable supplies became exempt supplies. Then what to do? Whatever input is there in your stock, reverse ITC reverse. Whatever input is there in your semi-finished goods, ITC you have to reverse. Whatever input is there in your finished goods, whatever the ITC you had taken, because you are a normal person or your supplies were taxable supplies, you had taken the ITC. Whatever ITC you had taken, please reverse the ITC. You have to pay it back to the government now. Capital goods. Sir, capital goods, I had bought it on 1st of January. Okay? Now, on 30th of, okay, from 1st of, supposingly, you were doing supplying taxable supply from 1st of June, 1st of July, your supplies became exempt supplies. Now what to do, sir? For these 6 months, you have already gone ahead and used the capital goods. Yes, sir. So, sir, they are going ahead and telling how much is the GST you had paid? 60,000. Sir, 6 months you used it for taxable supplies. Remaining how many months you are going to use under composition? Because 6 months you have used, one asset ka life is held as 5 years, means 60 months, 6 months gone, 54 months ke liye you have to go ahead and reverse the credit. Here, monthly calculation is done when you have to pay it back to the government. Remember, reversal ka time pe you have to calculate, monthly calculation you have to do, not quarterly calculation. 60 divided by 60 into how many? 54 months are remaining. So 54,000 with respect to capital goods, you have to go ahead and reverse the credit. That's all is being told. Sir, payment of ITC on switching to composition, normal person becoming composition or supplies becoming exempt, taxable supplies become exempt, whatever inputs you have taken, whatever ITC you have taken on your inputs, please go ahead and reverse it. Sir, rule number 44 is applicable. Reversal of credit, input held in stock, semi-finished goods, finished goods, whatever ITC you have to calculate proportionately on the basis of invoice and reverse it. Capital goods, ITC divided by 60 into balance life. Sir, whatever is the ITC divided by 60 into the balance life when you are not going to use it for your taxable supply. Now you are going to use it for your exempt supply or under composition, and hence that much amount of credit has to be reversed. Amount of reversal to be calculated for CGST, SGST, IGST and UTGST separately. If invoices are missing, sir, I don't have an invoice only, how to calculate reversal? Do it on the basis of estimated market price on the day of the event. Amount determined above will be added to your output tax liability. You have to just go ahead and file what? For reversal, you have to file ITC 03. Then no time limit to file the declaration, but CA square, chartered accountant or cost accountant. Remember always wherever CA square is written, it is chartered accountant or cost accountant. CA certificate required except if fair market value. No time limit to file declaration and no CA certificate is required except if fair market value is used. It shall be certified. Means ITC 03, you don't need a CA certificate unless you have gone ahead and taken the fair market value. Done, sir. Point is clear. Section number 18.5, what it says? No, 18.5 says, please follow rule number 40 and rule number 44. Okay, sir. We are anyways following. Then section number 18.6 goes ahead and says, Ramesh, in case of supply of capital goods and plant and machinery on which ITC had been taken. So if you have gone ahead and taken the ITC on capital goods and plant and machinery, so supposingly I have gone ahead and bought for my business capital goods or plant and machinery, I have gone ahead and taken the ITC. Now, if I go ahead and sell them, they are going ahead and telling you have to go ahead and pay tax on registered person say pay reduced ITC, which is whatever the ITC was taken minus 5% per quarter or part thereof, or the tax on transaction value, whichever is higher. Proviso says when refactory brakes, mold, dies, etc., zigs, etc., are supplied as scrap. In that scenario, you just have to go ahead and pay the tax on transaction value. In that scenario, you don't have to go ahead and do the calculation, reduced amount of credit or output tax liability, means tax on transaction value, whichever is higher, that calculation need not be done. Next, there's a circular which is there. Circular goes ahead and says, before I go ahead and go to the circular, I would like to say section number 18. Section number 18.1, sir, what are the circumstances? 18.1 A, B, C, D. A told about new registration, B told about voluntary registration, C told about, can you tell me what was C telling about? C telling composition became normal person, tax exempt supplies became taxable supply. Sir, section number 18.2 told no ITC of invoices older than 1 year. Sir, section number 18.3 went ahead and told business transferred ITC also can be transferred, ITC 02 to be used. Sir, fourth one which was there was talking about reversal. Reversal means these two cases basically ulta. Normal person became composition person. You have to reverse the credit. Taxable supplies of a registered person became exempt supply. Section number 18.5 is total bakwas. It says follow rule number 40. Rule number 40 and 44. Section number 18.6 goes ahead and says whenever you supply plant and machinery and you go ahead and supply capital goods, you have to go ahead and pay GST, which is the ITC, which is reduced amount of credit, or the tax on transaction value, whichever is higher. Quickly give me a heads up. Are we all clear till here? Yes, sir, we are all clear. Let's go ahead. Circular. ITC apportionment in case of business reorganization. Section number 18.3, which I just taught you. When there is a demerger. Now, for ITC apportionment, value of the assets of the new unit to be taken at state level, that is distinct person, and not all India level. For an example, everyone over here. For an example, there is a demerger which has happened in the state of UP also, MP also. 100 crore ka asset was there. Here also 100 crore ka assets was there. Okay. Now here the asset which was transferred was 60 crore ka asset to the new unit. Here for no example, for an example, if I go ahead and say, hmm, supposingly there is uh, Tata have gone ahead and done a demerger. Now they have two units. Supposingly, one is in Karnataka and one is in Maharashtra. Okay, I'm missing out on the example. Let me go ahead and take the example from my book only. Okay, 1 minute, everyone. Just a minute. Here. So supposingly there is XYZ company which has unit MP and UP. There are two units which are there. One is in MP and UP. Okay, I will go ahead and take the same example. MP and UP. Okay, sir. Then what happened? Then they are going ahead and telling the total assets ka value is 100 crore. What is the total assets ka value? Total assets ka value is 100 crore. ठीक है? Here it is 60 crore. Here it is 40 crore. ठीक है? Then while its assets of MP and UP are 60 and 40 crore, it has gone ahead and transferred business to ABC. So basically what happened over here, XYZ was there. XYZ transferred the business to ABC. ठीक है? Then what happened? Then they are going ahead and telling as a part of demerger, assets of amounting to 30 crores are transferred in MP while 10 crore only are transferred in UP. So here 30 crore are transferred and here 10 crore is transferred. So overall basis pay, if you see state wise, if you see 50% asset transferred, here only 25% of the asset is transferred. But overall basis pay, if you see how much ka asset is transferred, 40% of the asset is transferred. So they are going ahead and asking you, when you are going ahead and doing the calculation, will you take state wise, will you transfer state wise credit, that is 50%, 25% in 50% you will transfer the credit in MP and 25% in UP, or you will take on all India basis 40% and you will transfer 40% credit to the demerged unit. So they are going ahead and telling over here ITC apportionment value of the assets of the new unit to be taken at state level, that is distinct person level, and not at all India level. So they are going ahead and telling total assets amounting to 40 crore, the unutilized ITC of XYZ to be transferred to ABC in the ratio of 0.5 and not on the basis of all India basis, which is 40%. You will not go ahead and apply. So when you are transferring the credit from XYZ to ABC, you will not take transfer 40%. In MP, you will transfer whatever the e-credit ledger balance is there 50%, and in UP, you will go ahead and transfer 25%. That is what they are trying to tell. Next. ITC 02 only in those states. Now listen to me very carefully. Sir, if I have not gone ahead and demerged any unit in any state, for an example, there is no demerger which has happened in the state of UP, then tell me one thing, in which state only will I be required to file ITC 02 is my question. You will be required to file ITC 02 only in the state of MP. You have to file ITC 02 in that state where transferor and transferee both are registered. For an example, in UP there is no demerger, or means might be there is no transfer which has happened. Why will you go ahead and file ITC 02? They are going ahead and telling over here transferor to file ITC 02 only in those states where transferor and transferee both are registered. Sir, formula for ITC apportionment applicable to all forms of business reorganization and not demerger. Sir, is it only that when demerger is happening, then we'll go ahead and apply this formula of going ahead and transferring on the basis of asset ratio, or sir, any kind of business if there is a demerger? For an example, there is a business which is being continued by a father and a son. Son is telling, I want to separate my business. Now, when the son has gone ahead and separated the business, in that scenario also, can sir, this apportionment formula be applied? Government went ahead and clarified this apportionment formula basically on the basis of the assets ratio. You can go ahead and apply on any kind of business divisions, basically wherever one big business ka one part is hived off and put separate, that scenario may whatever the asset ratio is there, you transfer the credit. Not only for demerger, for any kind of business divisions which happen, you can go ahead and transfer on the basis of asset ratio. Next, apportionment ratio shall be applied to total ITC and not with respect to each head. For an example, I have to go ahead and transfer. I have to go ahead and transfer. A Limited is going ahead and transferring to B Limited. A Limited ka CGST, SGST, IGST. Here it is 10,000, 10,000, 50,000. Total is 70,000. Now, if transfer has to be done 50%, sir, you apply 50% on each, 50%, 50%, 50%, or you will go ahead and directly apply 50% on the total input tax credit. They are telling apply 50% when you want to transfer supposedly 50%, apply that on the total amount of credit. It means 70,000. If you are transferring 50%, means 35,000 will be transferred. Now the next question which was asked was 35,000, the transferor will transfer from CGST, SGST or IGST. They went ahead and told it is up to the will of the transferor to go ahead and transfer. from whichever head he wants. It is told over here, sir, apportionment ratio shall be applied to the total unutilized credit and not with respect to each head. Sir, after now I have to transfer 35. No, should I transfer from this or this? They went ahead and told transferor shall be at the liberty to determine amount to be transferred from each head. He can go ahead and transfer 35,000 like 10,000 from here, 10,000 from here, 20 gone, 15 he can do from here. Up to his will. Up to his will from which head he wants to transfer. Then the next one over here, apportionment formula to be applied on the ITC balance in the e-credit ledger on the date of filing. Okay, everyone over here now, listen to me very carefully. You will have to go ahead and transfer amount. How much is the amount to be transferred? What will you do? Amount of ITC multiplied by the ratio of the asset. Yes, sir. Now they went ahead and asked, sir, okay, I have to transfer when I have to, how much is the amount to be transferred? How will you determine? Whatever is your unutilized ITC multiplied by ratio of asset. They went ahead and asked which date ka unutilized ITC and which date ka ratio. They went ahead and told unutilized ITC you have to go ahead and take on the date of filing ITC 02. That is the date of filing ITC 02. Whatever is the unutilized ITC that you have to take multiplied by, sir, ratio of value of asset. Which date ka ratio of asset you have to take? Asset ka ratio, on that basis you will transfer. Ratio of the assets of which date? They are telling the appointment date of demerger. In the demerger ka scheme, there will be an appointment date of demerger. On the appointment date of demerger, whatever the assets they both are holding, on that ratio you can go ahead and transfer. Done, sir. Point is clear. Let's go ahead. Come to the right hand side now. Free gift and sample. Everyone listen to me very carefully. I will tell you directly. We have already learned this in the chapter of supply. Sir, I have gone ahead and given free gift. Everyone listen. If giving of free gift is falling in section number 71C and it's a supply, I will get ITC. If it is not falling in section number 71C and it is not a supply, then ITC shall be blocked. Remember always, free gift and sample, if activity is a supply, ITC allowed. But if such activity does not fall in section number 71C and it is not a supply, no ITC with respect to input services to the extent used for such distribution. ITC shall be blocked under section number 17(5)(h). Buy one get one, sir, buy one get one is like a two supplied at the price of one. All the input relating to input service and capital goods shall be allowed. Done. Next. Sir, original equipment manufacturer. Everyone over here now. There is someone called an original equipment manufacturer. For an example, LG televisions. They went ahead and told one component manufacturer who will go ahead and make the television ka supposingly LG hired someone to go ahead and make the box cabinets, the black color ka panels which are there for the television, because LG makes only the technology. They went ahead and told the component manufacturer, sir, you buy your mold, you make the mold say component and give it to us. Per component, how much will you charge? He went ahead and told, I will go ahead and charge 100 rupees. Okay, later, now this was the contract. He will buy the mold, he will go ahead and supply the per unit of the component at 100 rupees. Okay, sir. Later, he could not find the mold, so original equipment manufacturer bought the mold and gave it to him free of cost. And hence, when the original equipment manufacturer gave the component manufacturer the mold, because he could not find it, so sir, when this guy went ahead and gave it to him, tell me one thing. First of all, is it the original equipment manufacturer ka business to go ahead and give him the mold? No, it was the component manufacturer ka business to buy the mold, and hence when the mold is bought, he will not get any input tax credit. Okay, sir. Sir, free of cost, 1 lakh rupees ka mold was supplied. So definitely the component manufacturer will go ahead and reduce the price of the component and he will say, okay, sir, you can pay 90 now. Government went ahead and told Ramesh, in the value of supply, you will have to add the amortized cost of the mold. 1 lakh rupees ka mold, how many units the component manufacturer is going to make? For an example, 10,000 units he is going to make, means 10 rupees you will have to add it to the value also. Always remember one thing, if the contract was that the component manufacturer will buy the mold, he will make the item and give it to you, but later you bought the mold and gave it to him free of cost. First of all, you will not get the ITC because it is not in the course of your business to buy the mold. It is not your business to buy the mold. You gave it to him free of cost. Let him go ahead. Now, make the component, give it to you. When you are receiving the component, the value of supply pay, you have to add the amortized cost of the mold. Done, sir. Point is clear, and hence the value of supply will become 100 rupees. Now, sir, supposingly, original equipment manufacturer, this is the component manufacturer, he went ahead and told, I will buy the mold, I will give it to you, and how much will you take? Now this guy went ahead and told, sir, per component, I will charge you 80 rupees. In that scenario, no problem at all. When you buy the mold, you can take the ITC also. When you go ahead and give it to him free of cost, already this guy would have gone ahead and told you the correct price only of his work which he is going to do, and hence in this scenario there will be no addition etc to be done in the value also. That is what is being told. ITC on the mold die set by the original equipment manufacturer to the component manufacturer free of cost. If contract was for supply of the component using mold and die of the component manufacturer but supplied by the OEM, amortized cost of the mold and die to be added to the value and ITC to be reversed since it is not considered in the course of business. Sir, it was told that he will buy the mold, but you bought the mold and gave it to him, you will not get the ITC. Whatever ITC is there, you have to reverse it. Plus, amortized cost has to be added to the value. Next, if contract was for supply of component using mold and die of the original equipment manufacturer told, I will only give you the mold and die. You have to give the component. In that scenario, ITC also will be allowed and there will be no addition to the value also. Yes, sir. Point is clear. Here, I am done with your chapter of input tax credit. Listen to me very carefully. Everyone over here. I input tax credit. Let's go ahead and quickly revise now. I went ahead and taught you section number 16. I taught you section number 17. I taught you section number 18. Section number 16, I went ahead and told section number 16.1, registered person is eligible for the credit of the goods, services or both which he is using for his business. Section number 16.2, TR condition to be satisfied. Tax paying document, received the goods, tax paid to the government, and the last one is return filed. Section number 16.3, ITC taken, depreciation will not be given. Sir, if you have taken depreciation on the tax component, ITC will not be given. Section number 16.4, 16.4 went ahead and told the last one, maximum time limit is monthly return for the month of September, which is 20th October, to take the ITC, or actual date of annual return, whichever is earlier. Section number 17.1, if you are using something for business purpose, non-business purpose. Section number 17.2, using something for taxable supply and exempt supply, you can take the ITC with respect to business purpose and taxable supply. For here, they have gone ahead and told rule number 42 and 43 shall be applicable. Exempt supply का definition is given in section number 17.3, nil rated, wholly exempt, non-taxable supply. RCM का supply 1% of securities का value and sale of land and building का stamp duty value. Section number 17.4, banking company. Banking company 50% credit take, 50% forget it. Distinct percent when you take the input services, take 100% credit. Section number 17.5, block credit. Very, very important for your exam. 100% block credit, so you have to know only. Done, sir. Section number 17.6 was basically talking about that government will go ahead and tell the method of apportionment, and government have told. Section number 18.1, special circumstance. It was talking about the special circumstances when you will get the credit. 18.2, invoices older than 1 year, you will not get the credit. Section number 18.3, transfer ka case mein transfer the credit to the transferee. Section number 18.4, reversal of credit. Yes, sir, when shifting from taxable supplies to composition or taxable supplies becoming exempt supplies. Section number 18.5, sorry, 18.4, 18.5 total bakwas. 18.6, when you are going ahead and selling your plant and machinery or capital goods, you have to pay tax on transaction value or the reduced amount of input tax credit, whichever is higher, but not applicable in case of the refractory bricks, mold dies, etc., which are sold as scrap. In that scenario, you just have to pay tax on transaction value. I hope you guys enjoyed the chapter. If you enjoyed the chapter, please do hit the like button so that We know that you enjoyed the chapter, and also go ahead and comment and let me know if you enjoyed the chapter or did not enjoy it. Right, sir? I'll go ahead and close my chapter of input tax credit over here. A graded chapter, very, very important for your exam. Done, sir. Chalo. Now, the next chapter which is there is job work. Everyone listen to me very carefully. Job work can be termed as a B graded or a C graded chapter, but this time I believe they can ask you a small question. This is the point which is an amendment, so they can go ahead and ask. Then ISD ka chapter again a C graded chapter, but listen to me very carefully. B graded or C graded, they can 100% go ahead and ask from job work or ISD. They will go ahead and ask 3 to 5 mark question, so you can't leave it and go. I will go ahead and now after this ITC chapter, I'll go ahead and upload job work, and I will go ahead and upload input service distributor, which you will have to watch at home and then solve question answers. Done, sir. We will go ahead and do it. I'll go ahead and close my day over here. Now you have to go ahead and watch job work and ISD. Love you all. Take care. Bye.